Hello guys, how are you? Today I'll be doing an analysis on the latest video of Allen Reminick. But before I do it, I'll just share this chart which I posted in my group few hours ago. As you can see, it is a Bitcoin 1 hour chart, and this white data was used for the prediction, this white area, and rest of the pink area is the predicted one. So you can see that this is a bigger cycle and the pink one is a smaller cycle, and how it was able to find the bottom here, and then now it is looking to go down, but I will come back to it in a moment. First, let's get back to the video. So I hope you can see. So I hope you can see. So anyway, so basically, I've noted down few points from his video. And the point number one could be the overemphasis on astrology and cycle. He talks extensively about the Venus cycle, Mercury aspect, Jupiter positions controlling New York Stock Exchange, Dow, etc. But we have to, we must remember that a market decision should not rely on price action, and they should be relying on price action and the market structure and the other drivers, and not just the only the planetary positions or the fractals. Because I have tested fractal myself, and you know the fractals can change in a jiffy, and there will be 90% correlation, and in one go it will be totally wavered. So I'll be coming back to that original chart which I posted earlier, but before that, this presentation is important. So astrology can be interesting, but it should not be the trading logic. So this is one of the biggest demerit of Alan Reminick. I've taken his course, and I know from a fact that uh, because he solely relies on fractals and astrology, whereas I'm much more successful than him, and I know that he's doing this thing down. And institutions, the third point is institutions, they do not rely on astrology to allocate billions of dollars. So it is sufficient to say that the big institutions like JP Morgan and other big banks, they are, or hedge funds, they are not looking at astrology. So coming to the second point, he claims that from now on the pullbacks will be negligible. So he says that they will not be non-existent and the dip will be tiny. So my critique is this, that no market moves in a straight line forever. There is always correction and events. So you cannot ask people to uh, buy stock market just because of a gap up over the weekend. And predicting negligible pullback is very dangerous and an overconfident move, or posture, to say the least. And risk management requires considering drawdowns and not dismissing them. So these points must be taken into consideration. The third point is that he says that the futures don't gap. He specifically said in his video that the futures do not gap, which is very untrue because I trade futures myself, and futures are gapping all the time. Futures, S&P futures gapping up over the weekend is not a rare event at all. He calls it gapping. He calls this gapping up a rare event, which is totally untrue. My group, we are always trading the gaps in the futures, so it is untrue. Futures do gap, especially after major and macro event policy news and when the liquidity is thin. Treating a gap like a mystical signal is misleading. Gaps happen frequently. So this is what I just said. So then he goes on a narrative stretch that he interprets it as that one gap as a proof of a start of parabolic phase. And by parabolic phase, he means that it is the start of the third wave. So this is what he actually meant to say in if we speak in terms of the Elliott wave language. So one gap does not defend a structural trend. And parabolic phases are recognized by accelerating trend structure and not one candle. So you cannot just because of one gap over the weekend, you cannot just say that it is now the start of a parabolic phase. And basically it could be the other way around, because just like the retail or the inexperienced traders, they become bearish at the bottom, just like Allen Reminick. Allen Reminick was so much bearish during the April crash. He was calling short during the April, and we all know that the market bottomed on April 6th, April 4th or 5th, I think. And I was longing the April bottom, and he was shorting the April bottom. And like a typical guy who has no clue, a typical retail mindset, he is now getting bullish at the top. He's saying that now the market cannot even retrace, the pullbacks will be negligible. So which is totally again very unresponsible and typical of a guy who has no clue, because he's just doing what he did in the April, but just the opposite. Instead of shorting the bottom, now he's longing the top. So it is just a narrative stretch. And the fifth point is he has an implied certainty about the wolf race. He quotes that the stock market is now entering a super bullish phase. Cycles push the market higher, like no prices under six, likely no prices under 6,700. So now he is saying that he has got certain mystical cycles which are going to push the S&P 500 up and up and up, more up and up, and the market will not go below 6,700. So my criticism is that no analyst should speak in certainty terms about future price floors, and market structure can shift rapidly due to macroeconomic shocks and other things like Fed policy, etc. Responsible commentary uses probabilities, not absolute. So, but he is sure about it. I don't know. I'm 10 times. I think I'm 100 times better than him when it comes to the cycle. I will just show you, because not only I've mastered the bigger cycle, I've mastered even the smaller cycle. I will come to the small cycle of 1 hour in Bitcoin in a bit. I'll just show you what I'm doing. But uh, even even when a guy like me who has made $2 million in one trading account verified by my Facebook account, uh, I do not talk like that. I know that it will happen, but I do not talk like that. That market there will be a floor of market at 6,700. I just know that market will go up, and I do the risk management, etc. Okay. And then he says that, and then he predicts a long direction with a wide window. That he says, and he has a very confusing language. Like we will crash maybe next year, or maybe we will crash maybe in 2028. So I don't know how to use this information, to be very honest. Multi-interpretation without clear data models are too vague to trade. Like, how do I use it? When I share my charts, I share my a model prediction with you guys. Like the market is gonna bottom at, like, for example on November 3, and then it will go up. I show the path. But how do you use it? That maybe we'll crash next year. How do you use it? A 1 to 4 year timing window is not precise enough for actionable strategy. Like it is like the words are saying over here. How it is not an actionable strategy. Period. It is a totally useless information. You're just making a video telling nonsense, and you think that you know the cycles. I'm sorry, you do not know the cycles. Good forecast requires data, catalysts, and timelines. And then he says, buy every dip, every 2 hour dip. What is a 2 hour dip? He actually said this in this video. Buy every dip, even 2 hour dip. He suggests buying tiny dips aggressively. Dip buying is valid in strong uptrend, but blind dip buying is not a strategy. 2 hours micro dips are noise, not trading setups. Every trader must have a defined entry criteria, stop losses, and time frame. So basically, his 2 hour buying dips is actually just like a retail traders who panics when he see a candle in 1 hour or 2 hour. So I think he just like acting like a person who doesn't have any clue, and he just have a strategy of buying 2 hours dips. I don't think so any 2 hour dips are coming. Maybe at least not right now. When they will come, I'll tell you. Mention hedges with cheap option casually. So basically, he's suggesting hedging as an easy insurance, as if it is easy. Most of the people, they do not know trading, and even more people than them, they do not know options. So option hedging requires timing, premium decay, understanding, and sizing, and they are much more complex than buying and selling. So options has a lot of strategies. So most people, they do not know how to hedge. So how can you say that it's an easy insurance? Cheap option does not mean good hedge. there is there are Greeks involved like theta one, implied volatility, crush, etc. And false confidence in cheap hedges can lead to sloppy risk behavior. And I think it is not only it is a sloppy risk behavior, but it is actually an excuse, because he's saying that market is going parabolic, and now he's actually blaming you that it is your fault that you do not know how to do hedging, cheap hedges like he could, and he would get away with it if he's wrong. And then he gives historical cycle references, like he references 1907 cycle, 1937 cycle, 1969 cycle, 1999 cycle repeatedly. I mean, history rhymes. I know history rhymes, but market today are driven by modern liquidity mechanics, derivative flows, buyback, global macros, Fed policy, option gamma dynamics. Of course, the cycles works, but not Allen Reminick cycles. His cycles, they are antiquated, they are ancient. So for the cycles, in order to find a cycle, you need to do some other thing, not the Allen Reminick thing. Comparing pre-algorithmic market to today's is very oversimplistic. And then emotional rally argument. He has this emotional rally argument that he says that there is an emotional FOMO going on, and the retail is FOMOing and it's driving the rally. True, sentiment matters, but calling it purely emotional ignores all of these factors. All of these factors like earning revisions, liquidity injections, rate expectations, institutional positioning, systematic flows, and also the market timing. You think you know the market timing and you think that the market is going up. But what about if your analysis is wrong and somebody else thinks that the timing is there here for a top? What about that? Then how will you explain this emotional FOMO of the retail? So you cannot just shrug the shoulders and say that retail is FOMOing and now market will continue going up. And then he teases crash, but markets keep going. He suggests that it's a bubble, but it keeps extending the timeline. Bubble language without price structure confirmation is actually fear marketing. Bubbles are identified after break of trend, not while price is grinding up in a trend. So these elements have to be understood. And then he promotes his course inside his analysis. He promotes his course. He's selling you his nonsense, no good course inside his videos. He's blending forecast with sales funnel, creating incentive bias, and viewers should be aware of credibility versus marketing crossover. Not everybody is like EIP, who can share you the great analysis like I am doing right now. Do you see this? This is the 1 hour Bitcoin chart and it's posted in my group when it was over here. Where's the pen? Yeah. And so overall, this is bottoming. This 1 hour suggests a bottoming, but this the mini cycle, it suggests a short into the November 3. And then on November 3, it will be an upside for like for maybe 10 days. So how do you compete with this analysis? You cannot. You cannot compete with this analysis. Like you can see that, do you see this, my cycle in the past, they're working so precisely, like see, and then the decline. And when this is declining, we know that the bigger cycle is upside. So this will be a buying opportunity. I shorted over here and I'm gonna make a lot of money when it goes over here. Actually, I'm not looking all the way down. I'm looking to take profit around here, like structure wise, around 108,500, around I think here. And then I'm looking for upside. But this suggests this amplitude does not mean the price magnitude. It is just the timing thing. Like this, this amplitude does not mean the price magnitude. It just the timing thing. So this actually suggests that there will be a bottom over here. It does not mean it will be do a big crash over here. So on November 3, it will be a bottom and then the upside. So how would he compare with this? He cannot. He simply cannot. So this is how EIP does his analysis, not like Allen Reminick. So basically, you need lots of things. You need lots of things, but you cannot just rely on planet position, historical cycle analogies, and certainty statement to, to shill your course. And he has been consistently long. Like he missed whole of the stock market bottom on April, and he was caught with his pen down during the April, and now he's longing the top. When I think it is very irresponsible for him to suggest that stock market will continue going up without much of a retrace. Thank you. So do like my video if you like my analysis of this, and so that I can keep sharing my models as if I feel like. And all the best, guys. Thank you.